Claps, they say, is good for blood circulation. Relentless round of applauses, since up next we're bringing experts who have literally seen the ins and outs of the Indian BFSI industry. We have with us Mr. Dinesh Kumar Khara, Chairman, State Bank of India. Mr. Gopal Srinivasan, Chairman and Managing Director, TVS Capital Funds. Mr. Murali Ramakrishnan, Managing Director and Chief Executive Officer, South Indian Bank. Mr. Sabyasachi Goswami, CEO, Perfios. These leaders are here to share their views on Indian banking and financial services, new convergence and new imperatives. They are joined by our very own Mr. E. Kumar Sharma, Deputy Editor, FinancialExpress.com. Please join me in welcoming our esteemed guests up on the stage, ladies and gentlemen.
I think as a moderator, we in our newsroom say the moderator's job is that of a literary midwifery. So I would minimize my intervention, and when we have experts like the ones we have on the dais here, I think there's lots to learn, and we probably will spend more time listening to them. As a brief thought to what we are getting into, I mean, we were looking at this IMF global outlook, which they brought out in April, and the word uncertainty was used something around 60 times. And if you look at RBI reports and statements, I think the global headwinds and of course tailwinds from India also figure often. But the India story on banking has been a very happy one in the sense that we have been showcasing the ability to withstand financial shocks. Well, we had a few failures in the past, but some bit of governance perhaps. But now there is digital depth. We just saw the session there and earlier, and banks have been doing a lot on that. SBI in particular leading the show, and other banks as well. And also profitability. I think we are perhaps one of the most profitable banks today, I think, on the planet. And I was reading a story in The Economist, which has often been very critical, also taking of how Indian scenario has changed. And Indian banks are also, this is all in the backdrop of also tight regulation. So if I can begin with Mr. Dinesh Khara, as a leader in the banking arena, as an opening thought, perhaps, how insulated you think today we are from the global currents and some of the risks that you see, or we need to be alert to, be it from a cybersecurity part or whether technology, and stay protected in an interconnected world. I mean, where do you see actually the way we are?
Thank you very much. Well, I think when it comes to the global economies, practically all of them are coupled quite tightly. But at the same time, while we are coupled, which is essentially an outcome of the globalization, it's also a reality that we at a individual bank or maybe at a country level, we keep on evaluating the potential risk which emanate from such kind of integration. And the live example of the same is what we witnessed in US at the time of the Silicon Valley Bank. When all this event happened, perhaps we were quite well insulated. The reason behind is the regulation. While at a point of time in US, the regulator decided to have the light touch regulation for smaller entities, we had witnessed at the same time that in India, it's not only the NBFCs which were brought into the regulatory regime of RBI, but also the cooperative sector also, cooperative banks also were brought into the regime of the regulator. Why? Because perhaps we in India could very well imagine that contagion can flow from any quarter. So while the risks are universal, what matters most is the ability to visualize and put in place the regulation so that the system stays insulated. The second point which you mentioned in terms of the cyber risk, perhaps it's a cause of concern for everybody across the globe. It's a conscious effort on the part of the financial sector, more so with the adoption of more and more digital, it becomes all the more pronounced. How to stay safe from the risk which are there in the network. Because when it comes to cyber security issues, it is not merely the banking system. It is actually all the players who are there in the ecosystem who contribute to this risk. And if you really ask me, there are two things in the cyber security. One, of course, is to ensure that the systems within the bank, they should be protected well. There should be enough firewalls. There should be enough visibility of the trend as far as the traffic is concerned. There should be adequate steps taken in time to ensure that the inner system of the bank stays protected, and it requires round the clock vigil. Actually speaking, the SOCs are more like, the warriors on the front. They keep on very closely monitoring the traffic and the kind of traffic and the trend of the traffic, and put in place the actions, put in place the safeguards in time. But very important component here is also the ecosystem, which also involves the customers, their financial literacy, their cyber awareness, cyber literacy, and also the intermediary network, which is essentially the telephone system. When we have such strict KYC norms in the financial sector, is there a room for the telephone operators to have the lighter KYC? It can be only because of the lighter KYC that the fraudster can acquire a number, can call, and can get away with that and can throw away the pin. I think it's a menace for which the society in general and each and every component of the financial sector and its ecosystem have to stay on the guard. That's what my sense.
Okay, I think a fairly detailed one, and I think you covered quite a space in that. Mr. Gopal, you from the private sector, but you kind of admire some of the things happening in the government. You have often spoken of this regulator-designed markets. I mean, we've often talked of UPI, ONDC, and you kind of say, how transformative can these be in the Indian context? I mean, that's one question which I had, but other than that, I mean, from what Mr. Khara has said, if you have anything, if you can, share your thoughts.
It's a hard act to follow, Dinesh ji, given the power of State Bank and its deep knowledge of scale of India for more than a century. The way I understand India is as a generalist. I understand India as an Indian, not as private sector or public sector, not as an investor, not as a banker, right? I just understand it as an Indian. And the most obvious thing we miss about India is the most obvious thing that we know about India. And that is India has got scale. It's got scale in banking, it's got scale in people, it's got scale in talent. Today, when generative AI is coming, already two of our startups which we have invested in, and I'm sure Perfios and others are no exception in State Bank either, have already started using generative AI within 6 months. So we've got scale. And what does that really mean? It means very specifically one thing, that there are going to be roughly, and I just want to keep the numbers right in front of me, 55 million new middle class people earning 5 lakhs real income per year households by 2030. 55 million, right? That's like close to one Europe. And this is the biggest huge shift that is taking place in this country. So everything that we do when we talk about all the things you mentioned, Kumar, and what Dinesh ji mentioned, talks to this one idea of scale, right? And given that we have scale, we have done two very fantastic things as a country. I don't know whether a bunch of people sat in a room and figured it out, or it happened as the Indian way, organically, which is how India tends to work. First is, we believe that innovation can be democratized. Americans believe that you have to have a startup and a Silicon Valley lifestyle to have innovation. India believes you can also have a Silicon Valley lifestyle and have innovation. You can also be State Bank and open 23,000 accounts every day on your YONO account and have innovation. You can also be HDFC and use generative AI and do offline payments and in innovation. India believes everybody can be innovative. And most importantly, India believes the government can be innovative. When the Reserve Bank of India and the governor is passionately involved in saying NFIR has to be passed as a bill this monsoon session, and India will take PCR, which every country has spoken about since 1985, pre-internet, and actually make it happen, which can be a game changer if it happens. I can't even imagine. I'm not a banker to even understand it. But from an outsider, this is like a glacial change if NFIR becomes reality. So innovation has become democratized. Startups are innovating. Government is innovating. Government organizations like NPCI are innovating. Banks are innovating. I think that is the crux of the change in India. And therefore, it's innovation by design. When you see Klarna come from 45 billion to 5 billion valuation, and you see our good companies like Perfios still holding their valuation, companies we've invested in like UB increasing their valuation, you realize that India has done something right. And that is, it has designed the market and then let innovation happen in a design space. The world is moving towards higher regulation. Cowboy nations like America are not, and they're paying the price through SVB, is what Dinesh ji talked about. In an era where everything has become scale cannot exist without good regulation. It's impossible. And India has done, I think, absolutely the right thing. And the last example I want to give is co-lending. I have a vested interest. I'm invested in UB. State Bank of India, you would think large bank moves slowly, has been an exemplar in implementing co-lending. Co-lending is when NBFCs can originate a loan and banks can underwrite within 9 seconds, right? In real time using what is called CLM1, a co-lending model, one of the RBI. SBI has implemented it in record time, and not just implemented it for one area like consumer loans, which others have done, but have implemented it full stack, agri, SME, and not only implemented it for outside NBFCs to feed them, but also their own private user, closed user group of NBFCs. I think the way innovation is happening in India and the way everybody is innovating makes us, so when I say, Vasudhaiva Kutumbakam, we refer to many things, but I would say it also refers to innovation. The whole Vasudhaiva Kutumbakam in India is innovating and being exhilarated by it. I don't have anything else to say.
No, I think that's a very nice way to capture it. Mr. From the point of view of South Indian Bank, I mean, you've heard what SBI has to say, and you've heard Mr. Gopal as well. Your thoughts and what is in this environment keeping you up at night?
Yeah, I think the developments which Mr. Khara spoke and he spoke about the innovation, etc. I think it's I believe that this is the time for India because we are at a stage where the per capita income is going to go up, and we are looking at chasing a 5 trillion or maybe a 10 trillion economy. And when these changes have been witnessed in many other countries, we see the kind of credit penetration happening in the country is going to be really going at a tremendous pace, which means that we need to take care of two very specific things. One is the customer safety and the customer data. Both are extremely important. I think Mr. Khara touched about cyber security and all the related safeguards which we need to put in place to ensure that customer rights are protected, customer secrecy is protected, information is protected, etc. I think lots of developments are happening in that respect. And as we scale up, I think parallelly we are also coming up with a lot more measures to put guardrails so that we do it in a safe environment. The other one is with respect to convenience. I think huge innovation is happening towards bringing a lot of convenience to the customer. That's the reason where we are seeing now complete digitization happening in end-to-end delivery of products. Obviously, end-to-end delivery is more amenable for retail or smaller end of SME where everything can be templatized and your underwriting can be done through a credit model, and the entire fulfillment can happen through a platform. So I think this is actually going to bring in a lot more convenience, and customer can bank 24/7. So both in terms of customer acquisition, in terms of underwriting, in terms of servicing, what we are witnessing is something which we have never seen in the last several decades. So I think we are in for a fantastic time, and with more and more of these aspects getting covered in the days to come, I think regulators are not only playing a catalyst role in terms of supporting this innovation, parallelly they are constantly thinking about how to make all these things so effective. Like the recent guideline on FLDG, while there was a thought that FLDG should be taken out, but then they've come back for a digital lending that maximum 5% FLDG can be. This is the way to really support the innovation, actually speeding up the delivery of products for the increasing customer base which is happening in India.
Excellent, actually. Mr. Sabyasachi, as a fintech player in this, I mean, how excited are you at listening to all of this? Where do you fit in?
So I think it's a great time for the country like India. I always believed India is a work in progress country, and as far as we understand it's work in progress, there is an enormous amount of work still needs to be done. Though we have made good progress in last couple of years as an industry, but I think there are still lots that can be done. Now, while I say that, we have lots of data which is available, but we are still figuring out how to utilize those data to make maximum out of it and solve the pain areas which each of us in the BFS space has to address. Now, let's take an example because you brought in ONDC as one example. So account aggregator is one such. There is OCIN, there is ONDC, there is many such regulations or I would say public initiative which the MOF has taken. How do we utilize all of those to give a better experience? Not only experience to the citizen, but also as bankers, how does our life changes? I think that's going to be immense value to the people who are working in the banking sector itself.
Okay.
Because what we have done so far is we have always tried to give the customer experience in a much better way. But we have not thought how we are giving and changing the life of our own employees. So, I mean, I have seen underwriting units slogging late nights in the month ends to approve files. Do we still need to do that? I don't think so. So there are technologies available which can take off that from the employees slogging at night. But I think that shift is slowly happening. So I think you will see India quickly shifting in the next 2 years, and with the digital transformation can be fast-tracked, which is happening with the advent of AA or ONDC. I think ONDC is very powerful. As you see, the behavioral data can start coming in, which will make the underwriting much more powerful.
Yeah.
So I think these are few things which we are working on as a company, and as an industry, I see that everybody stands to benefit.
Very important, I think. Mr. Dinesh Khara, actually, this point about data, which has also come in, and you, as a leader, so to say, actually, given that you have operational efficiency, you've been able to defend against risk. You've also been achieving credit growth. All of that is there. How do you actually plan to transform the experience, shall we say, of customers, particularly in terms of product design now? I'm saying product design more from an individual point of view, keeping, let's say, I'm speaking hypothetically, say looking at the cash flows. I mean, the income and savings of mine, let's say, is very different from that of Mr. Srinivasan, for example. So how do we therefore look in terms of an individual and then customize a tailor-made for individual products based on the cash flow? As a leader in this space, do you think there is any way you could push this, or is there a scope for this?
Yeah, very much, because, being a legacy bank, if I may say so, because our existence goes back to the year 1806. So 217 years we are in existence and are offering the banking services for the Indian citizens. So in that kind of a situation, for a good part of our journey, data was more like a static subject for us. We today we are privileged to be a banker to 480 million customers, and with that kind of a customer base, we have got an insight into the behavior of so many customers also. For last about 2 years or so, we have started leveraging analytics very from the user's perspective. Though we have embarked upon this journey about 8-10 years back, to bring in the data scientists and work out various cohorts and look at generate various algorithms to really use them for our internal risk management point of view. For last 2 years, we are looking at this data from the customer's behavior point of view to assess their behavior and offer them the pre-approved products. So we have already seen the outcome of this, because when we came out with Yono, initially it was a standalone platform. It was 3 into 1, pure play banking, financial superstore, and e-commerce. During COVID, we got a chance to really scale it up in the sense that to have an insight what customers are doing. And actually the adoption of the digital became very strong during the COVID period because of the restriction on the mobility. And that gave us enough insight into their behavior. Based upon that, we have started offering the pre-approved loans. Initially, we started as a pre-approved personal loans. Then we moved on to pre-approved business loans. Now we are also working on a new product which is pre-approved agricultural loans also. The insight into the behavior of customers also has allowed us to undertake another journey, which is essentially in terms of the hyper-personalization of the product. So that is something which is a work in process, and I hope to see the outcome of that very soon. Similarly, the other very important component for which the banking system is being used is for the remittances. So we are in a position to understand the customer behavior and offer them the product which meets their requirement. Having said that, today I think it is the customer centricity which is one of the guiding principle for us when it comes to deciding about the product processes, offering the channels, whether it should be digital or it should be physical. So all that is something which we are in a position to really visualize and offer. So I think this is a journey which of course I would say that we are tweaking every now and then. We are trying to incorporate the learnings and improve upon the journey too. So that is something which we are doing.
Great. I think that's something to look forward to. Mr. Gopal, two quick points actually. A, we are missing Mr. Rangan here, though I had from an NBFC point of view loads of questions. But 2 points. One is to what extent this network of layered architecture, which also in some sense came about in this, can bring in synergy in the convergence of banks and NBFCs as they operate. Do you see something happening there? And second point, and a link node not necessarily connected, is the role that you foresee of this generative AI? You did mention about it a little earlier, to trigger efficiencies, so to say. These 2 points, if you can just quickly, because we've discussed, you had some thoughts on this earlier also.
No, I think there's so much to be spoken about, and I'm sure today's forum will cover many things. You organize a good forum. I think that whether by design or whether by I don't know, unintended, not fully intended design, India has developed a very natural layered architecture for credit underwriting. So credit under appetites vary from bank to bank, from NBFC to NBFC, from lender to lender. With this architecture like co-lending, for example, you have the an FLDG that you correctly pointed out, which has been restored. You have the ability to do layered underwriting. The NBFC takes a higher risk. The banks are willing to take a lower risk. And perhaps behind them, there are debenture holders who are willing to take even lower risk. So I see it as a very clear 3-tier architecture. In some sense, it has established the very traditional relationships that you have of architecture of layers in a very digital way. Because the whole thing has now been digitalized, I think, very nicely. And Perfios was a pioneer in this process. The second thing I noticed is it's a networked architecture. So we're building networks digitally. Everything in India today is a massive network. We recently invested in PhonePe. PhonePe has 210 million monthly active users, which we think, in our opinion, is going to go to about 400 million monthly active users. So huge networks. ONDC is another network, right? The opportunity in ONDC to bring maybe 1.5 million we call it nano micro operators, NAMO for short. So to bring nano and micro companies into the credit stream, especially on the supply chain side. So I think huge networks which are coming in India, and everybody here is sitting on a network. They are sitting in a very nice niche network in Kerala, which they can take enormous advantage of. So I see networks as one thing, but I see two other things that I should talk about. One more thing I should talk about is India is a story of institutions, right? And institutions are what make and underpin, like the central flagpole in large circus tent. That circus tent stands because of that large tent pole, we call it in the firm. India is a story of institutions. And our institutions have transformed to embrace digital. Rather than the argument 5 years ago, who will win, the challenger or the incumbent? In India, there is no question. The incumbent himself has become the challenger. So I think that is one point to be kept in mind when we have these discussions. Coming to generative AI, so many numbers are floating around. 90% of work in banks will be affected by generative AI in some sense. 50% of work hours in a bank will change because of generative AI is what popular numbers are going around. But the way I understand it, while generative AI is not a fabulously powerful movement, more than anything about efficiency and productivity, which are, I think, automatically bound to happen, the two things that I think will change with generative AI, one is credit underwriting will become far more intelligent. As a result, you're going to get fair access to credit in a much better way. Second is customer experiences are going to dramatically improve. I think that is going to be a fabulous aha moment. Banks are known to be, shall we say, the most boring companies to deal with, necessary companies for many people. Oh, you have to do it. I think it's going to become much more enjoyable. I'm sure people will enjoy that. The third thing I see with generative AI which is happening is cyber security. I think tremendous opportunities there to predict infosec events before they happen rather than after they happen. So I think generative AI is going to be banks, education institutions, obviously CRM, obviously law. These are all going to be huge areas in which change is going to be led. But I would say generative AI is absolutely change for the good. I think we shouldn't spend too much time on the productivity angle. We should spend time on customer experience, credit underwriting, and cyber security.
Yeah. It's that our profession is also included in it is also a component that both excites and worries us, actually. So, as journalists in our newsrooms,
You provide all the content. Without the content, there is no LLM. You require a lot of content. You are the content generators. You'll produce even more now.
so we take the advantage of training the data accordingly. Anyway, Mr. Ramakrishnan, you've heard what has been mentioned in this context. So, if you were to say in terms of in this scenario, what would be, as from your vantage point, the key priorities, let's say? So what would that be, given the way your thought process is right now, what occupying your mind space?
See, a couple of things about my bank specifically. See, we started off as a regional bank. It's a 94-year-old institution. So, but the way we have now transformed this bank over the last 2.5 years is to completely align it in the way large banks are run and large banks are growing. Technology is a big leveler for us because it doesn't matter how big or how small you are. If you are using the same technology, you will be able to bring in same efficiency. So we're actually using technology as a force multiplier. And today I can say that in any of these products, we compete with the best in the industry. Therefore, if you are meeting with a AAA corporate today, we bid along with biggies in the banking system because technology helps us to do that. So I believe that technology is a big force multiplier, and this actually has taken off this traditional advantage which large banks or big sized banks had. So aspirationally, we would want to obviously become a national player. Digital is actually helping us because digital is place agnostic. Today, if I am able to put a nice app which gives customer convenience, I can sit in Kerala and source from anywhere in the country. And if I use a AI or ML based credit model for underwriting SME, I can sit here and assess a person sitting in Jorat and give him a funding. And today you have a supply chain financing platform, I can discount any bill which is drawn on anybody. So I think if you look at every single product today, for example, our credit card proposition is completely digitized, right from sourcing to underwriting to servicing to transaction monitoring to everything.
Nice. Excellent.
So I think what technology is doing is actually bringing up everybody to the plane of efficiency. And from then on, you will be actually, and today I don't think we are competing. If you ask me, I totally agree with the fact which Mr. Gopal made. Today, I think all of us need to work together because we have so much to cover as a country.
Right.
Credit penetration is still very, very low in the country. When we are looking at growing to 5 trillion, 10 trillion, we need far more financial services. I mean, SBI still is not in the top 15 in the world. We need more SBIs to be in top 10 in the world, and we need.
By credit, you mean what? Credit to GDP ratio. That is what you're referring to, the numbers that you're saying? Is that what we're saying we need more depth there?
Yes.
Okay, I see.
Plus, I think the way today, if you look at a young population, for example, their aspirations are not limited to what we were all probably thinking when we were growing up. Today, a 25-year-old or 28-year-old is thinking about becoming a unicorn within 3 years of starting his outfit because he strikes a brilliant idea with which he can capitalize on the scale which Mr. Gopalan talked about. So we have the scale, we have the advanced technology, we have the innovative mindset, and we have the aspiration. I think this is, and India has this story up and coming for many years to come because our average age of consumers are still not going to go up.
Customer profile has also changed a lot. While they want to be unicorns, even from a customer millennials, even if the wallet is thin, the tastes are expensive. So I think we have to somehow align various challenges.
While we are talking about consumer-related things, it's very interesting to note that in the SME and large corporate space, if you look at it today, with the way I think some of the government initiatives, for example, this water project which the government has come out with, tremendous opportunity for many EPC players, many construction companies. Yesterday, I was with somebody in Jaipur. They are talking about several thousands of crores of money is going to be allocated for many of these missions, which we have not even scratched the surface of it. These are not digital. This is pure, hardcore, implementing it in the field.
Yeah.
And there is so much which is going to happen from now for the next 5 to 10 years. So I think in all areas, except, I mean, not necessarily in consumer and technology related area, I think across the spectrum, India has a huge growth story ahead of us. I think it's a very excellent time for, I think, financial service providers because all of us can aspirationally becoming one of the top players in the Asia.
Very true, actually. I'm constantly looking at the watch as we look at this. I just bring it down to maybe a question or two more. Very quickly to you, Mr. Sabyasachi, and then come back for the last final round. You have this various customer profiles also. I mean, you see, one doctor was telling me when they said NBFC, you're saying NBFCs are all product driven. They are like the tertiary care in hospital, where you have a cardiac treatment, you go there, whereas banks is like a primary care, you go there often. So in terms of where in this scenario, what has been painted so far, where do you see, your priorities right now? Your priority as in your space, the sector, fintech.
Sure. So I think first, I get reminded of Amara's law, where we underestimate the technology in the short run and a kind of, overestimate in the short run and underestimate in the long run. But if you see, in the last couple of years, technology has become core and mainstream for all kind of industry segment, be it BFSI, mobile, logistics, all kind, manufacturing. So I think there is no running away from the fact that technology is the core now. Now, having said that, look at the ubiquitousness of cloud computing, the machine learning, the ML, the generative AI which we are talking. It's only going to enhance our productivity. It's not going to take away what the human intelligence is there, even in generative AI. So I think there's a lot of noise around generative AI, but the core of AI is the base for generative AI. And AI runs only with the human intelligence. So I think we shouldn't forget that. So the area that as a company we are working on is one on the generative AI to make the user journeys much more powerful for the banking space, of course. The new user journeys with the use of AI, because AI is supposed to make the citizens dealing with any kind of credit or otherwise much more seamless. So we are facilitating that. which also means that we are trying to embrace the financial inclusion, so that we are working with not many banks, including large and mid-sized banks as well, in creating some of these sachet-side products, which is for the lower end of the spectrum, which otherwise the large banks were, because of the cost restraints, they were not able to approach that segment. But now with the technology and with the different public stack available, I think we are creating jointly with some of the banks and us those products which will kind of address the lower band of the, of our overall population. So I think that's a big, powerful thing to happen for a country as a whole. So I think that's the very good space that we are working at, which includes agri for that matter. And Khara sir already mentioned that. We're doing a lot of work on the agri side, which includes satellite imaging and many things, which is powerful.
Yeah. Last point, I think last round, which I will keep is in terms of looking ahead. If I can begin with Mr. Dinesh Khara, at this point now that, we are in a situation where we are profitable, the banks are profitable, they're doing well, there are a lot of tailwinds as well. Banking being a cyclical activity in some sense, at this point of time, do you think there is need to look in terms of, counter cyclical measures, something to, maybe look in terms of, capital, so that tomorrow if there is a problem, then, we have some cushion. What could be strategies in such a time, when it is counter cyclical? And any thoughts on what that and the way forward? Any?
Thank you. Well, when it comes to, well, the going is good, of course, bankers are known to be conservative. So
And you
that
feel
is why,
happy about it?
and I think it's a need. Finance as a subject needs bit of a conservatism, even beyond banking, I would say. And when I say so, because they are the one who are exposed to the risk the most. So when they're exposed to the risk, naturally, to ensure that the institution stays protected, it is incumbent on them to build up enough internal reserves also, apart from strengthening the various risk management practices. So that is something which we have been doing, and we will continue to do that. And uh, apart from, you would have observed that when it comes to the various capital adequacy ratios, etc., which are prescribed by the vessel, invariably there is a step up when it comes to the regulatory prescription as compared to Basel, and there is a step up even the board mandate. So I think to that extent, uh, the capital prescription which is there in the banking system, it actually is a very good shock absorber. But nevertheless, banks also on their own also keep on improving the shock absorbing capacity in terms of identifying the risk in its true earnest and also building in the mitigations. Having said that, you also questioned about what is the way forward. The way forward is something which is going to be a bit of a collaborative efforts. There was a point of time when all this was being talked about, whether fintech will rule the financial sector, banks will cease to exist. I always maintained during those days, and even now, my stand remains the same, that it is an opportunity to collaborate. Fintech offers the solution to a problem. Larger organizations are having problems, for which they are seeking solutions. So to that extent, it offers an opportunity to collaborate. And also, fintech in isolation may not be a success, because when it comes to the domain knowledge of the finance that is there with the banking system, domain knowledge about the ecosystem, domain knowledge about the customers and their uh, unstructured information about the customers, that is available with the banking system, and that constitutes very important component when it comes to lending. So I think if fintech and the banking system collaborates, perhaps many newer opportunities will emerge. We are always on the lookout of figuring out how to build in convenience, more so when a large population is becoming Gen Z, and they are the one who are looking at convenience on the go. Maybe it's a utility bill, maybe it's a banking transaction, maybe it is buying food from all these various apps which are available. I think they are only looking at convenience and availability of service as per their requirement. So I think it is an effort on the part of banks like us to remain meaningful and relevant for this generation of population. And with that in mind, we are in the bank, we have already created an innovation hub for quite some time now, and we are engaging with the fintechs to figure out the solutions. We are consuming service of various fintechs, including Perfios, when it comes to profiling our SME customers. So I think there are ample opportunities for collaboration, which will be mutually beneficial for fintech as well as for the banks.
Yeah, I think just tempted to add one component which I heard while I was coming to this venue was one of the elements in terms of profitability today, the component of CASA. CASA is contributing to profitability, current account, saving account. Do you think as a leader today, there is room perhaps to put a limit on CASA? That today, even today in today's environment, we talk of 0% interest rate on current account. So do you think there is need for change as a leader? Are you trying to push for that?
See, actually, at times these terms becomes quite deceptive too. Why I will just explain. It was always felt that current account and savings bank is best of the combination. Yes, I do agree. Provided savings bank is a low cost deposit, should not be high cost like 6 to 7%. If it is 6 to 7%, it is nothing but a TDR. So to that extent, that's why I said that at times these terminologies becomes quite deceptive in its character. And also the savings bank, we don't reckon the frills, the cost of the frills which are offered, along with the cost of the deposit. So if at all we account for the frills which are offered along with the cost of deposit, along with the savings bank facility transactions and all those things, we need to really look at the cost. I think more important, other than the CASA, would be what is the overall cost of deposit and the cost of resources for the banking system. That is something which should be the guiding factor. So I think, to my mind, that's how I look at it. And so long as we're in a position to raise deposit, whether it is in the form of savings bank or in the form of term deposit, if you really ask me, term deposit, if at all it is offering 6 or 7%, without any transaction cost, is even better than the savings bank.
Okay. Mr. Gopal, your concluding thoughts on this? Sorry? Yeah. Just concluding thought on this, just one line from each.
I just, I'm sure I come across as super enthusiastic because I am actually super enthusiastic. I think three things I look forward to in addition to what's been said is, I think this, in addition to NIFR as a digital convergence of all data in the country, the entire NBFC sector, especially the upper layer NBFCs, as the named NBFCs are, I think a lot more liberalization in policies, for example, giving them a chance to issue credit cards. When you've got pre-approved credit limits on UPI already enabled for the banks, which I think is revolutionary. I think those kind of things would really be another huge scale opportunity in addition to Gen AI. I think Murali talked about GST invoices being underwritten, which I think is fantastic. He also very nicely pointed out that the death of distance has actually happened and we should, just like scale, that's another obvious item on the table. But I look forward to the regulatory convergence.
Okay.
I look forward to the debenture markets being more efficient. Lot has to be done in that area and lot is being done in that area. Okay. And I look forward to upper layer NBFCs being unleashed more to do some of the heavy lifting in the industry.
Great, actually. Yeah, Mr. Ramakrishnan and Sabyasachi, just one in a line about what you are looking forward to, and then we take a question from the audience and we conclude.
In my view, I think you talked about the cycle. I think there are two situations when lending institutions make mistake. When economy is doing very well, when economy is not doing very well. So in the sense that when it is doing very well, we think that there is no risk in whatever you do. Therefore, you end up actually accumulating a lot of riskiness. And you think that anything which you lend will definitely perform. So you you underestimate the risks and overestimate the performance of the customer. That is when things are doing very well. When things are very, very tight, obviously the opportunity itself becomes very limited. Therefore, when everybody is scrounging for the very limited good deals available, you will make a lot more compromises in terms of profitability, in terms of your norms, etc. So in my view, I think the fundamentals of credit underwriting doesn't vary. Irrespective of the situation the economy is in, I think if you do a responsible banking, if you believe that you are actually a custodian of public money, I think you should be sensible in what you do, and you shouldn't really look at something and compromise your standards just for the sake of getting growth or just for the sake of getting profitability. In my view, sustenance of profitability, continuation of quality portfolio, I think these are the things which are going to define a good organization, not any short-term measures that you see profitability going up and your high risk, high return is a known thing in finance.
Okay, yeah.
Therefore, you might be overawed by the profitability, but then you might be taking a lot of accumulated risks.
Mr. Any one line so that we are running horribly short.
Two things comes to my mind. First is, while we are seeing a rapid credit growth on the banking front, I think one thing that we need to keep a watch out for is the kind of intelligent and new type of frauds that we see every day. Working with almost all the players in the country, the advent of fraud that we're seeing, the intelligent kind of fraud, and people today are feeling that A means no fraud. Unfortunately, that's not the truth. Even it comes from source, there are much more intelligent way that we are seeing people are frauding the system. So we need to be worried about that. And the second is, while we are democratizing most of the data and we are creating a lot of public stack, we need to understand that what is in it for all the players, including the banks.
Great.
Like when we say A, the banks has to put a huge amount of IT infrastructure in place. What is in it for the bank?
Correct.
I don't think we try to bite that bullet. We'd never do that. Ideally, somebody has to wake up, bite that bullet, and figure it out what's the answer for it.
Thanks
I'll
so
leave it
much.
at that.
I think we're horribly short of time. Any one question, if I can, maybe just one, if you can identify yourself, and then. Yeah.
Good morning, everyone. My name is Sandeep Jain, and I work for HTP Global Technologies. We offer consulting solutions to banks. So my question is related to NPAs. We had a wonderful NCLT coming up a few years back. Government is promoting enterprise. We are having a lot of startups. We just see on the discussions. And with the topic new convergence and new imperatives, do we see a scenario in future, 3 to 5 years? Like yesterday, there was the news on Money Life. A certain bank, I will not name that, had 87% of haircut on a loan which it had. So do we see the situation reversing in 3 to 5 years with new convergence, new imperatives, AI, machine learning, everything coming up? We have everything, the best of human intelligence, the best of artificial intelligence. So do we see saying, okay, now the haircut is just 8 to 10%?
Whom would you want the question directed to?
Anyone, sir. All of them probably. Their views will be very welcome.
Okay, then we'll end with that.
In 3 to 5 years, do we see the situation remaining, or maybe 6 years? The haircut is just 7-8%, and
Dinesh,
92% when money is efficiently used with all the intelligence and machines that we have.
It could actually become a reality, and if we look at the developed world, we have seen it, that the kind of efficiency which has been brought in there because of the ecosystem, and whatever we are seeing today also in this country is partly because of the ecosystem relating to the IBC and the court. Because a couple of years back, it was only a fiction to lose the control of an enterprise. When it became a reality, we have seen the situation where people are coming forward for entering into a compromise settlements. So I think it is a work in process. It should not be a surprise, because the way we are looking at analytics and the way we are profiling the customer behavior, the analytics and that will certainly empower the system. But the fact remains that whether in the macroeconomy, accidents will not happen. That nobody can guarantee. So to that extent, there would be some bit of NPAs will certainly be there in the system. If at all accidents are only in the industry, certain industries will fail. If at all those industries which fail, that will create the NPAs. That will remain. But I think it will be minimized to a greater extent. That's what my expectation is.
Yeah, thank you so much. I think.
Just add one point to what Mr. Khara
Yeah.
said. I think one way probably this can become more efficient is when our legal system becomes far more better. Because today, if you look at the realization, whatever write-off or haircut which happens is because of the unduly long duration which takes for any case to get resolved. And that's primarily due to the innumerable variances in the way properties, etc., in across various states are today, the documents, etc. are. So I think technology can do a great thing of simplifying and probably coming up with a standardization which can probably cut across country. And legal system, if it becomes far more efficient, I think resolution can be shortened. Resolution can happen in a very short possible time. Today, the haircut is happening primarily due to the innumerable delays in getting resolution.
Thank you. You're not blaming the journalist, but blame the judge. Thanks. Okay. Thanks so much for your time.